Hello, trading has closed on December 30th, 2024. As always, we'll do our disclaimer first. We'll go over our calls and then make our predictions. It's my trading plan for New Year's Eve, 2024. Remember, it's a plan. I can change my plan. My plan can be wrong. Any trade you make should be made at your own risk. Also, when the new year starts Thursday, I have personal business in the afternoon. It's going to restrict my ability to risk my own money on these calls. We had a lower target, 59.4602, that printed. We said the signals were mixed, and the commonest thing was to gap and promptly trade out of Friday's range. We did that. We said this wasn't a perfect wall into the close, but probably qualified, and we certainly got the response the wall typically gives. We now have a higher target, 59.3958. If we don't keep up smartly, the rules call for that to print. We have a wall into the close in the other direction, so it's certainly possible we gap up and take this out. That's one of the possibilities. But as I said in my last video, which is here, I'm just ignoring buy signals. I'm not looking for places to go long. I don't care if I miss a move like the one we had today, because I think much lower prices are coming, and I don't want to miss the boat, and I'm willing to sit through a move in the other direction if that even happens. This is a pattern which usually closes near the high of the day. When that doesn't happen, there's more weakness. Now, tomorrow's open can substitute for today's close. That can happen. So we open up here, we can keep going up. But this is not the type of action you want to see, particularly at the end of the year. During the day, early on, MEJT said ultimately higher price would print, but there was an optional lower target. The optional lower target was here. We got the higher prices. Now says this move isn't for keeps. Gives us the higher target. We're now at DeMark's TDST line, 58.87 and change. Remember, support goes to one full bar under the line. So in the event we do gap down and go under this line, which I think is entirely possible, that will be support if it happens. It hasn't happened yet, and there's nothing stopping the support from holding and going up. But this is pretty negative stuff, if you ask me. Doesn't mean it has to drop tomorrow, but at some point, as we said, this is not a stable pattern, a spike bottom like that. At some point, that bottom has to be undercut. Doesn't have to happen tomorrow. Well, we had this line, we fudged a little bit because of this break, and we measured from the highest point over that line, so we should drop 300 handles. We now have a gray line. We've hit it in a straight line. We haven't gapped under it yet, but if we do gap under it, and again, that hasn't happened, but if we do gap under it, we're now calling for a 344 handle drop. Now, as rules say, if that gets reversed immediately, it doesn't have to happen, so it's not carved in stone. But if we do gap down, and I think I can't count this drop as being over. I mean, you could drop under 5,600. You can't give an exact number because this line's going up, and that's the number of handles under the line. Well, this is a Gann fan from here. Here's a bar straight line directly to the Gann fan, bar completely under it. If we get follow through, and we haven't gotten it yet, but if we get follow through, that's more trouble. And although you don't have to go to the next lower place on the fan, that's also under 5,600. Well, here's my minimum target, is to have wave green C equal to green A. I mean, you could stop at one of these other lines, but this takes us under 5,800 to around 5,790 or a bit less, And I think as far as this ABC is concerned, I think that's a reasonable target, and that's well over 100 handles from where we close, even if we do go up tomorrow. As we were rallying here, breadth was deteriorating further, meaning fewer and fewer stocks were taking us higher. This is weak action any time of the year, but it's particularly weak in the last week of the year because sellers tend to dry up, because when you sell stocks in the U.S., they have tax consequences because our tax year and the calendar year are the same, and people tend to have completed all their tax planning and tend to put off sales until the new year. And when they're not willing to put off sales until the new year, they're just anxious to get out, and that can't be good. We have mixed signals again, so we'll have to use these rules. Tomorrow's pattern has the early low, doesn't tell us where we open. It is bullish, there's a higher target. Unless we gap down smartly, the rules call for it to print. Now remember, one of the times targets can fail to print in their preferred time frames is when we're making strong impulsive moves. I think this one qualifies. So we have a wall into the close. So all those certainly would justify gapping up and taking this high out. It's one of the potential pathways. But it's bearish. Today's normally bullish pattern couldn't close near the high. Breadth deteriorated further even as the market was rallying, and if, in capital letters. If we maintain a gap down, the Marx rules call for a drop, which likely would be several hundred handles before it completed. Now, we have end of the year tax considerations makes any prediction for tomorrow pretty dicey, if you ask me. That being said, if we maintain a gap down, gapping down and recovering doesn't count. If we maintain a gap down, the elements are there for a collapse to begin, not finish, but begin. And just because you have the elements doesn't mean you're going to collapse, but certainly you have all you need if you gap down. So if we collapse tomorrow, don't forget that'll be in the Marx support area. I probably will go into the new year flat, as the drop would likely, in fact, the drop would be likely to continue into January. And my rules say very often, first 1 to 2 trading days of the new year, often, I use often twice, well, you'll forgive me, often go contrary to the rest of the first full week of trading and contrary to the direction of the month. So if we do have a gap down, you're going to be in the Marx support area. Strong gap down would put us where Norm Winsky has a change in trend. And we're right in front of the first 2 trading days of the new year. First 1 to 2 days of the new year often move contrary to the rest of the first week and rest of the month. So if there is a collapse tomorrow, and I can't say if there will be or there won't, but if there is, I'm going to probably go into the new year flat. But regardless of what happens tomorrow, I'd be willing to sit through a move in the other direction, because I think we're going substantially lower before the rally begins. It's the pattern with the early low. If we don't gap up and take this out, it could be real trouble, particularly if we gap down. You certainly could collapse into the close, but if we did collapse into the close, I don't think I would stick with a short position into January. Again, I might miss a trade, but that doesn't cost me any money. And that's the pattern with the early low, and that's today's call.